And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and prop firm trading, and making money doing all those things. So I'm in the United States, so the next thing I need to do is go over our risk disclaimer screen. This is for just in case someone looks at this video and says, I'm going to put all my money in here and wait and see what happens. And then they're not going to have any money left because this is foreign exchange is bouncy, fun. It is not anything that you buy and hold. You cannot do that in Forex. You'll be broke very quickly. So in that, this is a very active source of income. It is not passive at all. Passive meaning you don't have to break a sweat, but you know don't have to go dig a ditch or anything. But it does mean that you have to actually pay attention to what's going on in the world. So with that, let's get into a risk disclaimer. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I'm also involved in a prop firm trading challenge with Audacity Capital out of London right now. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I've held NFA registration in the past. Forex trading is highly speculative with a high degree of the high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. Now the CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and see what's going on in the world. First, let's go to the DXY. This is, again, not my favorite barometer of what the dollar is doing, but it works, so we'll use it. Let's see, so we've got a nice doji candle forming here. It's got another 3 minutes to it. So we're looking at a possible bounce on the dollar today, which right now the currency strength meter, which has some relevance, not really a whole lot, but some relevance, has the dollar way down here today. So right now the Asian market has the dollar as weak, which means it's selling off. I've already seen a reversal in the euro trade I was in earlier. That I got out profitably. So profits are always good. Let me see, what was I? So we've got a nice doji candle right here forming, and it's in the quote-unquote sell zone, but in the one standard deviation Bollinger Bands I have right here, got two standard deviations, one standard deviation. It's showing a little bit of like a mean reversion activity going on, so we're probably going to get a dollar bounce today, which would be good. Let's see, so after that we'll let's go to the euro versus the dollar, and here's that bounce I was talking about. I should have gotten out up here, but I didn't. I got out about here on that trade, but it was still profitable, so I'm not mad about it. But we do have a little bit of a reversal going on in the dollar versus the or the euro versus the dollar right now. Not sure if it'll sustain, but again, the big headline driving all the news today is whether or not there's going to be a U.S. government shutdown today, which, you know, it's just may happen, may not happen. I don't know. Dollar versus the yen. So I would not touch this trade right now because it's right in between these two areas and not really showing any leadership right now. Dollar versus the yen, way down, almost down into this buying area right here. So the buying area, I would look at it to come in around 147.62, although it looks like it's going to bounce before that. It's already taken the psychological number of 148, so we're probably going to get a bounce on that. So that's something else to I probably will get into that a little bit later. We have the British pound versus the dollar, and that is about as flat as you can get. Not really showing any where it's going right now, so again, that's a currency I would stay out of right now. The pound versus the yen. This is a big one that had a big drop to it. I'm looking to come back in around here. Try to catch a bounce around 199.05 and see if it'll reclaim some of that, maybe get into the 170s, maybe get an 80 pips out of it, maybe more. You know, we'll see, but that's a nice opportunity to come in and in stocks it's called bottom feeding, and Forex it's called mean reversion because it always bounces back to go back to this to the medium, which is the moving average part of the Bollinger Bands, the middle band, if you will. Let's see. Dollar versus the Canadian. Not a whole lot going on here either. It's coming down a little bit, but still not enough that I would really go nuts about. And then we have the Aussie versus the dollar. We have the Aussie versus the dollar right here. And again, we have, it's in this big buying area right here between the 1 standard deviation and 2 standard deviation Bollinger Bands, but it's kind of stopped. So at 66, that might be a good area to sell the Aussie to catch the bounce on that. I mean, to flip it rather, and get a little bit reversion activity going on again. Right now, it's one of the stronger currencies, but we'll see how that works. Here's the big one right here, gold. Look at that big drop right there. I was in gold, made a little bit of money on it, and then got up here and kept my stop losses tight, because it was a bullish volatile market, and I kept my stop losses tight and did not get wiped out when it dropped $50. Not more than that. So we have a 71 to 93, about a $80 pip drop in the in gold, but it stayed above the median right here. So let's take a look and see if my trade is still in. My trade is still in. My stop loss have moved up to 38.09, guaranteeing some profits on that. Would like to see that do a 100% retrace. Looking forward to it. Maybe get another gold trade in around here, around 39. And want to consider another gold trade right there. And that might push me into the 1600 range on equity, and which would get me closer to winning this challenge, and that would be fun. So I'm looking forward to that. My trading dashboard, how am I doing on that? Down $66. Not really, because this trade will wipe out that negative. And that's already guaranteed at least $150 worth of profit. So that's good. Silver kind of got bit too a little bit, but it is bouncing too. So somebody sold a lot of silver and gold last night. My guess is the British or the Chinese governments, because it's about the only way you're going to get that much gold dropping that fast. It's got to be a central bank that's selling it, having a little fire sale, if you will. So that's what's going on today. Something else I want to show you that I was working on yesterday is market types. And this is what I came up with market types. I have a little course I found on udemy.com, which is right here. Let's go back to this one. This is called the Advanced Forex Course for Smart Traders. The course is about 10 years old, and it's created by Sam Eder, who runs Market Mates. I cannot participate in Market Mates because, or as a prop trader, because they use CFDs, which are illegal in the United States. So I wouldn't be a part of his prop trading, but this is actually a free course. I picked it up for free, I think. So that is definitely a good course. Go here. Or well, I'll go to the course. I've listed this course probably a dozen times, and I highly recommend this course. So if you see the Advanced Forex Course for Smart Traders on Udemy, by all means get it. It's a great course, and it'll help you get to where you're going on in Forex. But this is where I came up with my little chart here, which shows me what's going on with the markets and the DXY. Let's go ahead and do these together real quick. So this DXY is, I would call, bearish normal, because it's within the bottom range of these two Bollinger Bands, of the middle and the 2 standard deviation. So that is normal bullish, bearish. Over here, so instead of sideways volatile, we can change that to bearish normal. Dollar versus the oh yeah, and here are the different market types right here I have on this in this one, we're using a 20 period Bollinger Bands with 2 standard deviation. And this is what saved me on the gold trade last night. I classified it as bullish volatile. It is still considered bullish, probably still bullish volatile. So we want tight trading stops and looking for swing trade opportunities in the direction of the trend. So that means when you get an $80 drop, then you get it at the bottom and you get it back that way. And might get stopped out here. That'd be very interesting. And then come back in around here. And again, keep very, very tight stops on that. So it's all sorts of bouncy right now. So let's go back to the back to here. We have the bearish normal, dollar versus the euro. We'll call it bullish normal again. And bring this over here so I can find it quicker. Bullish normal. JPY. What's that one? Dollar JPY is bearish normal, I think. We'll call it bearish volatile. Bearish volatile, but I'm looking for a reversal on that. Pound versus the yen is sideways. Remember that one? That one's very sideways. Okay, we'll call it. We'll call that one sideways since it's more than 1 deviation. So pound is definitely bearish volatile on that. Dollar versus the Canadian. The dragon is right here. It is bearish volatile. It is actually exceeding the 2 standard deviation Bollinger Band right now. Dollar Canadian, we'll call that sideways normal. Canadian sideways quiet. And then the Aussie, we'll call it bullish normal. And then gold, call it bullish normal. I had it classified thought I had it classified as bullish volatile. We'll call it bullish volatile. So it's still trending up like that. And then I could set my ATRs right here, and then set the pips right here in dollars on that, and that helps me set my stop losses. Whether I'm using a 3 multiple, 1 multiple, or everything like that. Bullish volatile, I like using a 1. So we'll change that to a 1 right there, and then that gives me a 22 pip, although we're at $39 on the ATR last I checked. But at any rate, that's what's going on today. I thought I threw in a little other goodies about how I'm trading and how I'm doing stuff. I don't have to go to work today, but I do have a dentist appointment today. Those are always fun. So you guys have a great one. I'm going to go do some stuff, and I will check it later. If you like this video, then by all means like this video and then subscribe. If you have any comments, then by all means have comment in the bottom, and I'll be sure to return your comments as soon as I can. In the meantime, you guys have a great one, and I will talk with you later.